recently, with the Inflation Reduction Act, focused very much on sustainability across industries, but effectively very focused on the automotive industry. You've seen a tremendous amount of investor interest across the entire value chain of electric vehicles, from batteries to software to services surrounding the vehicles to finally vehicles themselves. And that's driven quite a bit of activity, both in Europe and the United States, across tier one players, OEMs, and the PE and investor community, all because of really coming back to government intervention in the market through subsidies, both within the value chain and on the vehicles themselves.
The biggest change in the last 5 years was certainly that the major OEMs have all gone all in on electromobility. So there is a need to fundamentally provide a supply chain that can serve those electric vehicle platforms. So the decision of the OEMs has led to a ripple effect in the whole supply chain, and that's where investors can now take positions.
Based on where we are from an economic point of view, OEMs are definitely concerned about the near-term economic outlook. But given the lower inventory that they've had over the last 2 or 3 years, they've generated really significant profits, and that has been extraordinarily strong in driving investment in EVs. I think the major sort of driver for the OEMs is a concern at the loss of market share if they don't invest and push forward with EV launches. There may be some pushed out depending on how the overall economic picture unfolds, but there is definitely a high priority to gain market share in EVs. I don't see a drop-off in the momentum in the EV space because of market volatility or the current economic outlook.
After this volatile situation today now, we really have to rely on consolidation among strategics. Going forward, we believe there is opportunity for a mix of venture and private equity capital that can fund those critical, more mature startups in the coming 3 to 4 years.